All right, so I just had a question with one of my clients, and they are a buyer, and they asked me, they actually told me, I think I'm going to wait until the market calms down. What do you think? So here's the answer I gave them. My name is Sean Price. I am with eXp Realty, the Price and Price group here at eXp Realty. And we've had several buyers over the past 2 to 3 years that, because of the market being so competitive, it's kind of scary for people right now. So they feel like they want to wait. They feel like they want to hold off because inevitably the market's going to drop or inevitably the market's going to slow down. And that's true. Inevitably the market will slow down. We do not believe, there are really no experts that I've come across that believe that the market is going to experience another crash. We do believe that it will slow down. It will eventually kind of flatline as far as the appreciations is happening. But nobody's really expecting that to happen over the next 6 months to a year, year and a half, 2 years. We do think that the interest rates are going to calm the market a little bit, and we're starting to see that. But we don't think it's going to cause a breakdown of the real estate market. So what does that mean? So what that means is if you decide to wait for, let's say, 6 months to a year, because you want to get in when the market's calmed down, well, that's great. You might come in and you might not be facing, as many offers in a multiple offer situation. You might not have to bid as high. You might be able to actually get a property at asking price. Okay, so let's look at that for a second. So last year, properties, depending on the market, depending on the area, they increased in value between 15 to 20%. So what that means is a $500,000 house was that now worth $575,000 to $600,000. Okay, so if you were at the beginning of last year in January and the house is worth $500, and you said, I'm going to wait until January of 2022 because I think the market's going to slow down, that $500,000 house is now going to cost you between $575,000 and $600,000. The problem with that is when they put that house on the market now, we're in March of 2022, when they put that house on the market at $575,000 or $600,000, you're going to battle multiple offers. So that house is going to go between $650,000 and $700,000. So you actually end up paying $150,000 to $200,000 more for that property versus if you had gone in January of 2020. January 2021, sorry, got the years mixed up. January of 2021 and overpaid for that property. You overpaid 10% on the property then, you pay $550,000. Well, now the house is worth, $600,000, $650,000, $700,000. So that's the challenge. So if you wait right now, if you go in and you bid what we're seeing currently, if you go in and you bid on what's currently priced as a $500,000 house, which if you look backwards was probably worth maybe $425,000 or $400,000 a year ago. But if you look at a currently priced $500,000 property today, you're going to spend between if it's a well-priced property, you're going to spend between $550,000 and $600,000 on that property. Okay, so that scares a lot of people away. Well, what's going to happen when that property sells? Let's say that property sells at $550,000. The next property in that neighborhood that comes on the market is going to be base price at $550,000. So that property is likely going to sell for between $600,000 and $625,000. Okay, let's say that there's a 60-day cycle in between. Okay, so now we're 90 days out, and this $500,000 property, its comps are now selling at $600,000 to $625,000. It's $100,000 more. So, and we do not see this slowing down. Now, right now, as I'm shooting this video, properties aren't receiving 15, 20 offers. They're receiving between, 5 to 10 offers. But we're still seeing those prices escalate. So let's say that we go 6 months down the road and we've had 3 or 4 of these cycles. So this $500,000 property is now worth $600,000, $650,000. Okay, so you waited, and now you're 6 months down the road, and you decide, I'm going to go out and I'm going to shop now. Okay, so now you're looking at a $650,000 property, and not only are you looking at a $650,000 property, you might get that at asking price, but you're still paying that much of a difference, that delta between now and then. You're paying that delta more in the property. You may get it at asking price. You may not have to face competition. It may not bid up, but you're still spending $150,000 more. Versus if you got into the market now, you locked in the lower interest rate. That's a whole other factor that has effect on your buying power. You went ahead and overpaid for this property now. You're in the property, you've locked in the lower interest rate, and then as it appreciates, you're sitting there and you're gaining equity versus buying at that higher price, because it is not slowing down as far as the appreciation at this point. Prices are here. Next month they're going to be here, the next month, the next month, the next month, the next month. So when you come in and it's flattened, whenever that point is, you're still paying more money for that property than you were down here. And your payments are going to be higher because your interest rate's higher. So my advice to buyers is, if you are going to be buying a house in the next year or two, do it now. Get into the market now. And I'm not just giving this advice. Kelly and I have done this. We actually purchased our personal residence. We bought in this market because I truly believe that the market is going to continue to appreciate. I truly believe that when it does hit the point of calming down, it's only going to like flatline or maybe go down to like 2 or 3 or 4 or 5% normal appreciation. I do not believe that prices are going to drop. I do not believe that there's going to be a foreclosure crisis, especially in our area, because we have such strong income here and because the lending rules now are not the same as they were in 2008, 2009, 2010. So if you're a buyer and you're considering waiting, I'm afraid that's going to end up costing you in the long run. So please keep that in mind. If you have any questions, if you want to run through numbers, I love running through numbers. Please feel free to reach out to me. I'm happy to do that with you. Okay? Look forward to hearing from you, and we'll see you on the next video.